Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2026, and we're diving into Lockheed Martin's fourth quarter and full year 2025 financial results. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Lockheed Martin has had a remarkable year, and I'm excited to break down their financial performance and future outlook with you.
Revenue and profitability overview. Let's start with the top line. Lockheed Martin reported fourth quarter sales of $20.3 billion, up from $18.6 billion in the same quarter last year. John, what drove this increase?
The 9% increase in sales was primarily driven by higher volumes in their aeronautics and missiles and fire control segments. The demand for their F-35 program and tactical missile systems has been particularly strong, contributing significantly to this growth.
And what about profitability?
Net earnings for the quarter were $1.3 billion, translating to an EPS of $5.80. This is a substantial improvement from the $527 million or $2.22 per share reported in the fourth quarter of 2024. The increase in profitability is largely due to improved profit booking rate adjustments and higher sales volumes.
Cash flow and backlog. Cash flow is always a critical metric. How did Lockheed Martin perform in this area?
Lockheed Martin generated $3.2 billion in cash from operations in the fourth quarter, a significant increase from $1 billion in the previous year. Their free cash flow also rose to $2.8 billion, reflecting strong operational performance and effective working capital management.
And their backlog?
They ended the year with a record backlog of $194 billion, indicating robust demand for their products and services. This backlog provides a solid foundation for future revenue growth.
Segment performance. Let's delve into the performance of Lockheed Martin's business segments. How did they fare?
The aeronautics segment saw a 6% increase in sales, driven by the F-35 program. Missiles and fire control experienced an 18% rise thanks to tactical missile programs. Rotary and mission systems and space segments also reported solid growth, with sales increasing by 8% each.
That's impressive. What about their operating margins?
Operating margins improved significantly in the missiles and fire control segment, reaching 13.3% from a negative margin last year. However, margins in the rotary and mission systems and space segments saw slight declines due to changes in contract mix and cost recoveries.
Future outlook and strategic initiatives. Looking ahead, what is Lockheed Martin's outlook for 2026?
Lockheed Martin is projecting sales between $77.5 billion and $80 billion, with an EPS range of 29 to 35 to 30.25 cents. They also expect free cash flow to be between $6.5 billion and $6.8 billion, indicating continued strong financial health.
And what strategic initiatives are they focusing on?
They're investing heavily in production capacity and next-generation technologies, with over $3.5 billion allocated in 2025. This positions them well to meet the growing demand for their advanced defense systems and to maintain their competitive edge.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 6.24 for the quarter. How did Lockheed Martin's actual performance compare?
Lockheed Martin reported an EPS of $5.80, which fell short of the forecast by 44 cents. This miss can be attributed to the pension settlement charge and other non-operational expenses that impacted their bottom line.
How might this affect investor sentiment?
While the EPS miss might cause some short-term concern, the overall financial health and strategic positioning of Lockheed Martin remains strong. Their robust backlog and future growth prospects should reassure investors.
Key takeaways. In summary, Lockheed Martin has delivered a strong performance in 2025, with sales reaching $75 billion and net earnings of $5 billion. Their free cash flow of $6.9 billion and a positive outlook for 2026 further highlight their solid financial standing. John, any final thoughts?
Lockheed Martin's strategic investments and strong backlog position them well for continued growth. Despite the EPS miss, their overall performance and future prospects remain promising.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lockheed Martin's performance in the comments below.